Hi, welcome back. And the last in line of the profitability ratios are the one that is most important is return on equity. It is often referred to as ROE. And yeah, so this ratio is calculated as the how much of revenue is generated by the equity shareholders, basically the company's ability to use its invested capital to generate income. Okay, how much the company is using the invested capital to generate income. That's the ratio suggests net income divided by average stockholders equity, opening plus closing divided by 2. The higher the better. Okay, is doing at using its investment to yield a profit. Yeah, good to go. So let's try it in our Excel sheet right here, that is this one. Okay, and return on equity, ROE. Oopsie. The formula is net income divided by average stockholders equity. Okay, now what is average stockholders equity? That is obviously opening plus closing divided by 2. Looks cool. Yeah, and let's first try it for Hallmark ratios. That is, so return on equity is ROE will be net income is 35,000 and the average stockholders equity will be, go to balance sheet. Right here you can check the stockholders equity change. 90 plus 1 lakh comes to 190 divided by 2. 90,000 plus 1 lakh, okay, divided by 2, and the amount will come to what, 85,000, I guess. You can sure go ahead and calculate, because yeah, looks good. And what is 35,000 divided by 85,000? Hence 0.411. So let's check it. Okay, yeah, it was wrong. This is 95,000, and what's 35,000 divided by 95,000? Hence 0.37. Okay, so the ROE is 0.37 or 37 percentage. It is a good ROE or 37 percentage. Now the higher the come better. Okay, the higher the better. Industry standards can be dictated. Yeah, margin center and use this. Yeah, so every for the average stockholders, that is every equity invested, every $1 equity invested, the income earned is 0.37. Looks good. Now let's try this one in our local company, that is our baby right here. What is the net income? Net income is 229,229,158, and average stockholders equity is, go to balance sheet, go to capital account, right? Okay, just a second. Go to DAL, equity share capital. So there is no change. Hence 265,8,084 times 0. As there is no change, hence the opening and closing are same. 265,8 4 times 0. 265,8,234 plus 265,8,1,234. The average will also come to 265,8,1,234. Now I'm pretty sure about this calculation. If you want, you can check it, and looks like we are going to get shattered in this ratio because we are only earning 2 lakhs with the equity invested of 2.65. Yeah, shattered right again. 0.008. Okay, now if you want some comfort, I'll do it 0.009 rounding off, and the 0.09%. Okay, so for every equity rupee interest invested, the company is earning 0.009 rupee. Okay, so we have done most of the ratios that are possible and that are needed in real life. Okay, so this one is also done, and good day. I'll see you in the next lecture, which I'll tell you about the ratios that Tally automatically generates. Right here you can see this field ratio analysis. So let's see what Tally has in it. Okay, good day.